Back to Kate Rooney on Amazon, which is also headed higher. Kate, what do we see?
John, so this is a margin story for Amazon, and that's why you can see the stock up more than 5%. I want to point you to North American margins, operating margins, which were better than expected. We did see some expansion here, 5.9%. That was up from 5.6%. That was one of the fear factors heading into the print, that margins were compressing here. That looks strong. You've also got operating margins of 11%. That was better than what the street was looking for, which was around 9%. Guidance also looking pretty strong here. Q4 revenue guidance right in the range, and then operating income of between 16 billion and 20 billion for the quarter. A couple other beats here. North American revenue, 95.5 billion. That was better than expected. But again, John, the margin story looking really strong here for Amazon. And
Kate, thanks again. Let me get back to Kevin Mon here. I haven't talked to you for a moment. You've got a little opportunity to digest these Amazon results. I don't know if you have thoughts on Intel. This is a turnaround story. Now, I didn't really know how investors were going to react to that non-GAAP number. Now, the CFO did warn last quarter that there would be some charges that would affect non-GAAP EPS, but it just goes to show what a different experience a turnaround company is having from some others, yes?
Certainly, but for me as a portfolio manager, John, it's hard to overlook that negative bottom line number. Yes, we know that the PC market has slowed, and that impacts Intel more than it does others. We also know that they lag their competitors as it relates to the server market. So I do believe they need to lean into the data center business. And some of those numbers that they reported did give me reasons for optimism going forward if they dedicate their chips more towards data centers than they do towards that struggling and slowing PC market. But still, coming into the day, Intel was down, over 50% year to date. Now it really rose about 10% after these earnings. But we need to see where they allocate money going forward, and if they maintain that focus on data centers as opposed to keeping their focus on the PC market.
Indeed, to your point, the expectation for Intel data center revenue was $3.17 billion. They beat at 3.3. Mike Santoli, Amazon's margins, as Kate Rooney was just telling us, probably add to their story here. A little interesting for Amazon to beat on margins at a time when other hyperscalers are spending a lot on CapEx.
Yeah. It is true. Now, obviously, they have many levers to pull if they so choose on margins. And so that, I think, reinforces the idea that it's a pretty intact fundamental story. The guidance was more or less, bracketing or validating the current consensus and maybe suggesting a little bit of upside. It will never not be amusing to me that, 1/3 of the way through the fourth quarter, their revenue guidance has like an $8 billion span for the fourth quarter. But that just shows you the scale of the business and how it could break either way. This stock has been really kind of consolidating sideways. It was 185 last April. It was 185 at the close today or thereabouts. It was 185 at the high in 2021. So there's room here for, I guess, upside surprise as the numbers have increasingly fallen to the bottom line. And AWS, at least right now, at least not knowing exactly what they say on the call, no reason to really find too much fault with those results.